Welcome, traders, to our to another price action lesson. We will talk about today about our first bearish reversal. Remember, guys, last sessions we covered the hammer candle and the bullish engulfing. Both are bullish reversals, and this one is our first bearish reversal, means our shooting star. Let's go to our agenda, and yes, it is the same structure like the lessons before. We'll talk about the bearish price action candle. It's here the shooting star, and then of course a practical application. This is lesson number 2, how to trade a shooting star with option number 1, 2, and number 3. Let's go into the definition, the first definition of a shooting star, guys. A bearish reversal, it's a shooting star. And look here to the left, this chart here. You see, this is a clear shooting star. Look at this, huh? Here, a shooting star is a candle with a long upper wick, little or no lower wick, and a small body near the low of the day. That's a first definition of a shooting star, guys. Important here, with a long upper wick. Okay, we need the long upper wick. Why? I will explain this in the next seconds. And then little or no lower wick. It's not necessary that we have a lower wick. If we have one, then it's fine. And a small body near the low of the day, and then it looks like a shooting star, right? Let's go here to the right side, and we see it's a price pattern that occurs when price trades significantly higher than its opening, but decline within the period to close lower or the same level than the opening. Okay, first it starts. That's a weekly chart, right? That's the first day of the week. We see strengths. Okay, this week means when price trades significantly higher than its opening, right? That was opening here and then moved higher, but decline within the period to close means weekly. Talking about Thursday or Friday, for example, price decline, right? And it moves all back, right? That was a high and then come back to the close or come back to the opening, make also a new low here and then close very nearby the low of the day. And yes, let's go to the key takeaways here. The formation is bearish because the price tried to rise significantly during the day, but then the sellers took over and pushed the price back down toward the open. Okay, I got sometimes I get questions from you guys. Yeah, but why it looks like a shooting star, it looks like a hammer? Why it is bullish? Why it is bearish? What does it mean? Why are the sellers more powerful than the buyers, for example? Here, guys, that's the answer. The formation is bearish because the price tried to rise significantly during the day, but then the sellers took over and pushed the price back down to the open. That means at the end of the week of this time frame here, the sellers are more powerful, was definitely the winner than the buyers. Okay, as shooting stars indicate a potential price top and bearish reversal. Most of the time, the shooting star indicate a potential price top. That's the top of the price formation here, okay? Um, the long upper shadow represents the buyers who bought during the day but are now in a losing position because the price dropped back to the open, okay? Number 4 is the upper wick should be at least 2 times the height of the body. Remember, guys, it is the opposite to the hammer candle, right? Here, the upper wick should be at least 2 times the height of the body. Good. That's the shooting star. Let's go to the key takeaways for this bearish reversals for the shooting star. And here we will start with the position. A position typical occur on a price top should be on the higher high or the lower high. Okay, remember it is a bearish reversal. We want to sell, and that means here if we want if it is occurs on the lower high, okay, then we can trade the impulse. Okay, and here on an uptrend, it creates on the high or in the higher high here. That means, okay, we can trade the correction. Number 2 is the wick. The upper wick should be at least 2 times the height of the real body and a little or no lower wick. Look at this, the range of the body, it's 1, okay, and this multiple twice is here, and you see the wick is longer than 2 times, okay, perfect. It's not better, right, then it's 10 times bigger than the body. 2 is the minimum, and that's absolutely fine. It's powerful, and here we have a lower wick, right? We have a little bit here, but this lower wick here is not necessary. Number 3 is structure. The close can be above or below the opening price. Also, the close should be near the open for the real body of the candlestick to remain small. Means here the green body and also a red body is allowed. It's fine, okay? It's still a bearish reversal. Not necessary to close bearish, and also it's also not better if we close bearish than bullish, okay? That's absolutely fine. End of the day, we need a small body, okay? We need a small body. Number 4 is sell action, guys. Yeah, welcome to our first sell action. A shooting star indicate a potential price reversal to the downside. That means here, the example, we want to sell, right, in the shooting star candle. That's it for the key takeaways for this shooting star. Let's go to the key takeaways indicator for the shooting star. That means here we will use the S&P 500 at ES asset to explain the shooting star. And you see here the seasonality, right, is around this selling point here, guys. Look at this. It's here 5 years prediction, the 5-year seasonality. You see this is a top, and then we expect prices dropping. And here seasonality, current price located in a selling point. And this is a selling point. That's the best of the best, right? Valuation, and here we will talk about the valuation, specific valuation asset located in the bullish area. Sorry guys, give me a second. Okay, sorry, that was wrong. I forgot to change this one. Of course, it is a bearish reversal, guys. Specific valuation asset or assets located in the bearish area to short. Okay, we need definitely the valuation in the bearish area. And here, guys, remember on my last session, it is trading is never picture perfect, right? Sometimes we have the selling point, but we have not the valuation. But here, the best of the best is that the specific valuation asset located in the bearish area. Okay, here, for example, not the Japanese yen, not the US dollar is still is in the bearish area. We are more bullish here. Okay, means you can change the assets. Maybe the treasuries are helpful for you. Maybe crude oil is helpful for you. Up to you. Back test the specific asset, evaluation asset, okay, to find which one works nicely. Yeah. That's the idea here. Again, right? We need the specific valuation asset is located in the bearish area. Let's go into the COT. It is a S&P 500, guys. That means it is a future. We can use the COT. And this is the same here. Look at this. The commercials are bullish, right? We are here, but we need the commercials should be in the bearish area or also in the extreme bearish area. Means seasonality is in line, valuation not, and also the COT is not aligned, right? Let's check the trading day of the month at our last indicator here. And here, of course, guys, we need a bearish trading days, guys. At best, a cluster of several days to stay in the trade. Means we need weakness. And if we check this area here, that's around our shooting star, right? The 4th to the 6th trading day. You see on 5, 10, 15 years, we have one bearish day, but then on 5 years bullish, one day on 10 years bullish, 50% on the 15. Maybe this is not the best buying point. The best of the best would be that we have a bearish trading days, okay? That this is completely gray, like this one here, okay? Like 50% or less, this would be nice. But yeah, this would be the best, or here, right? This cluster and this cluster. We need bearish days. Means this is real, right? That's a real analyze. That means, okay, we created this shooting star here in the S&P 500, but seasonality is okay, valuation not, COT not, and the trading days also a few days later. That's trading, guys. Welcome. Welcome to the trading world. But here, guys, remember this one, that's what we need, or that's what the best of the best, right? Seasonality, selling point, valuation in the bearish area, the specific valuation asset in the bearish area. The COT, also here the commercials in the bearish area or extremes, and of course a cluster, or yeah, just a bearish trading day or a cluster of multiple bearish trading days. Okay, that's it. That's the key takeaways for the indicators. Let's go to another slide. And here now I will show you how to trade the shooting star, how to short the first the first bearish reversal together. Let's go into option number 1. Option number 1 is short below. Analyzes a lower high, right? We're in the lower high, and then a downtrend means a high, a low. We create a lower high, and maybe an anticipatory downtrend, a new lower low. We created a shooting star that's analyzed here, perfect at the top right, and action number 1 is short below. Let's go to the right side. Number 1, shooting star, key takeaways must be met. Let's do this together here. Means position in the lower high, in the higher high, or higher, or in the higher high. Let's go here. Means we are definitely in the lower high. Perfect. Let's go to another thing. It's the wick, right? The upper wick should be at least 2 times the height of the real body and a little or no lower wick. Let's go into the chart and look the small body here, right? Left to my pointer. And then, yeah, we have, I don't know, we have maybe 20 times above, right? The wick. It means, okay, it is definitely a line. And we have a low wick to the downside. That's also allowed. Number 3, it should be, it's allowed to have a green or red candle. Important is that the body is close or near to the low. It is a green body, and we have the close, or the body is near at the close. And yeah, number 4 is to short, right? That means, okay, let's go to number 2. As soon as the shooting star is completed in its respective time frame, we mark the shooting star high and the low. This is a high, guys, here, and this is a low. Number 3, the entry, the short order, it is a bearish reversal, is set slightly lower than the low to avoid possible fake outs. Okay, that means our low is here, for example, 4,590. Our short will be 4,585. Okay, 85, 86, 87, up to you to avoid fake outs. If we see weakness, if we trade below, then we are looking for momentum, not fake outs. The stop loss is set with a respective distance. For example, plus 33% above the high means stop loss above. Reward is more or less, guys. You know, you remember on the last sessions. It's less. Why? It should be not, or it's an sometimes it's not less, right? Sometimes it's great because you have a super small time frame, a super small shooting star. The most of the time you will get, and for me also, I'm looking for higher time frame, means daily, weekly, monthly reversals, means daily, weekly, monthly shooting stars, means as though the shooting star most of the time is big, okay? And if you trade the whole range, lower than the low and higher than the high as your stop loss, means most of the time your stop loss, your zone will be big, and that means you decrease your profit margin. Okay, but it's not wrong. Option one has a great trigger probabilities. That's the reason why I love the option number one, the trigger probability. If we trade below, right, its price moving down, then you're definitely filled 100%, and that's great. You're definitely filled. You will not miss this great trade opportunity. Protection, of course, it's one of the best. Your stop loss is above your high. Good, that's option number one, one of my favorites, because it's so easy to trade, and you have a great trigger probability and the best of the best protection. Means, yeah, I will not lose money. So, yeah, I will not lose money. Good. Option number two is short within the range. Again, the same example here, we are in the lower high. We created a shooting star, guys, here, right? Same shooting star like option number one, and we want to short within the range. Shooting star key takeaways must be met. It is the same shooting star. That's the reason. That's the reason why it's met, right? All of this are nice. Number two, the same here also. As soon as the shooting star is completed in its respective time frame, we mark the shooting star high and the low. Same like option number one, high and the low. And now number three, and that's the first different point to option number one. Set the entry, our short order, can be made market or as a set, up to you, within entire range of the shooting star. And here, guys, means set or market, up to you. If you need, if you don't want to short below because the reason, for example, for you is the zone is too big, or I don't know, the seasonality is maybe 2 days later, okay, or 3 days, and you want to wait, that means okay, wait, and then if price, yeah, after prices here back into this area, we are open here, right? And I split this in 4 different parts. You can set an entry. For example, you want to sell the shooting star, depends on your profit margin, around the 50%. That means here, set this one, or you want to short the shooting star in 2 days, then wait where you are in 2 days. For example, you are here in 2 days, short the market here, and then stop loss above. Oh, stop loss, yes. Stop loss is set with a respective distance plus 33% above the high. Of course, guys, the reward is here more like in the middle, right? It could be definitely better, right? Congratulations. If we move super high, we had a sample in the live trading session yesterday. Also, for example, we move super high into the zone, and then, yeah, you click market and stop loss above, means you increase your profit margin, right, to the moon. That's amazing. That's up to you, or you want to set, right? You want to set this at around 50% or 80%, fine, up to you. It will definitely increase your profit margin. It's more like in the middle, because it's also possible that we will never move higher, right? You will never move higher. We will move only, or we will stay here on this area, and then the seasonality point begins. Means, okay, you have to go market here on the low point, and yeah, the same on the option number one. That means it's not the best. It's like in the middle. Trigger probability is also here like in the middle, because possible you'll never move higher. You will never fill your order at 50% or here in the upper part. Maybe we will never arrive to this area, means you will never triggered. You're never filled, means the trade will go without you and you will make no money. Protection is again simply the same. It is the best, right? Because your stop loss is above the formation, above the shooting star. Great, that's option number 2. Let's go to our last option, and it's option number 3, and that's the difficult part maybe. Here, for some of you guys, if you have, it's not, or yeah, if you need more practice, then take your time, guys, right? My recommendation is open or create a big watch list with stocks, right? With hundreds and hundreds of stocks, and then look for these candles, right? And then yeah, then practice the entries, the 3 different entries. I promise you it will be easy if you have enough practice. The analyze here, it is the same structure. We're in a lower high and anticipatory downtrend, right? We create at the top here in the lower high area a shooting star. Action number 3 is short within a lower time frame zone. Let's go to the option number 3. Shooting star key takeaways must be met. That's fine. It's the same here lies, it is the same sample like the option number 1 and 2. As soon as the shooting star is completed in its respective time frame, we mark the shooting star high and the low. Same here also, right? Step 1 and 2 are always the same, the high and the low. But now this is tricky. The entry, our short order, can be made market or a set within entire lower time frame. Wait, give me a second. I changed this point, guys, sorry. The entry short order can be made market or as a set within entire lower time frame supply zone of the shooting star. Of course, it is a supply zone. It is bearish, right? Means what we have to do. Number 1, perfect. Number 2, let's mark the highs, the high and the low. And then we will go into a lower time frame. Again, this was weekly here, the lower time frame means daily, 600 minutes, 480, 240, 60, 15, 2, 1 minutes, up to you guys. It's never a right. You have not one specific time frame there, right? Okay, that's your job to find the best one with all your zone qualifiers, level on top of level, and so on. And now we go into this zone, and I think that's intraday. I think it's 180 minutes like this, but that's not important right now. We'll go into this lower time frame here, and you see the gray line here and the gray line here means this is your what is it, shooting star low and the shooting star high. And look what I found here. I found supply, right? It is a rally, the green candle, and then 1, 2, 3, 4 indecisive candles, and then the beginning of a drop, leg out, leg out, leg out. Great. This is my lower time frame supply zone. And I use my proximal and my distal line here, it's a blue line. And then, yes, I will set or mark it, up to you, right? If you set this one, means your short is your proximal line, short at 4,580, and your stop loss is plus 33% above the distal line. That's your entry. Then if you are filled, and guys, yes, we are filled. I will show you in the practical application this one. Filled, then got in, yeah. Then you're in the straight. Let me show you. Look, we have also here supply, right? A drop, indecisive means base, and then another drop. But follow the rules. Never forget the blueprint rules, right? The blueprints are the base for our trading. We have a level on top of level, means use this one. This is a level on top of level. Okay, it's in my trading plan. I hope it's aligned also with yours. Stop loss is set with a respective distance, for example, plus 33% above the lower time frame high, above. Stop loss is set with a respective distance plus 33% above the lower time frame high. Okay, that's the lower time frame high, the blue line, and it's above. And it's not necessary. It means that why we have the lower time frame in brackets, it's also above the high. Means you can use the zone here as an entry, but the stop loss still above your weekly shooting star. It's up to you, depends on your profit margin and your trading plan. Reward is better, right? Definitely better. It's not in the middle, it's better around the 75% because you will decrease your range. You will definitely decrease your range if you find any nice supply areas here in the whole range of the entire range of the weekly shooting star. Then you will get most of the time a small zone, right? And then, yeah, depends on your stop loss where it is. You will increase your profit margin then. Let me show you the trigger probability. Trigger probability is more like in the middle. We never know, right? It's possible that you will never arrive to the supply area. We will only arrive into the first, for example, but we canceled this one because we have a rule level on top of level, and we will never hit our zone here, and also not on preferred, right? You can use preferred or wider. I choose the preferred version. Maybe we hit only the wider. Then we are not filled. But if we are filled, then it's great. Then lower time frame stop loss protection means if you move your stop loss above this lower time frame zone, then yeah, you have not the best protection, right? It's easy, or it's possible, not easy, it's possible that you will stopped out here. Price moves a little bit higher because it is a lower time frame, right? If you use a protection, the initial protection with the stop loss above the weekly shooting star, then we have one of the best. Guys, that's it for the theory for our shooting star. The next lesson is our practical application. I will show you how to trade a real shooting star in practice. Don't forget to download your notes. Okay, I will add the notes again, all three trading options, and also the key takeaways for the shooting star and the key takeaways for the indicator. That's it.